Today I'm going to learn a little bit about lending from my friend Fernando. Hope he will join soon. Let's see. The idea is really to try to understand how can I get lending from to my house of co-living. So let's see if he can join. Do have customers here in Dallas that are really looking towards having capability um, to have. Oops, not this guy. Okay, John. Hey, Fernando. So let's see if I can add you here. There we go.
John. There you go.
Hey, what's
How
up?
are you?
I'm good, man. Thanks, Tiago, for having me on, man.
Roman, man. Long time. How's life? How is family?
Oh, we got our 4-month-old and a 3-year-old, so we are in the more challenging times, where it's crazy. Sometimes I'm with hanging out with my wife and we're just like, oh, I can't believe we're doing this. Like, I can't believe people do this. And
Right?
it's just wild.
Two
So
girls?
yeah, two girls, two girls.
Okay. I
Well, we
I
went to
have
a
two
wedding
boys.
on. You have two boys?
Yeah.
Oh, okay. Okay. We went to a wedding on Sunday and there was like a daddy daughter dance. And I was like, oh, at least I get to do like the daddy daughter dance twice.
Right.
Like that'd be kind of cool. It's kind of nice. So I don't know. Thought that was an interesting perk.
That's for sure. That's for sure. Yeah.
So what's
Well,
up? What are
great.
we chatting about today?
Yeah. So I have customers here that want to invest in Dallas because it's just an amazing market for co-living type of houses.
Okay.
And they are looking for lending opportunities and lending capability to make sure that they are able to get some financing for this project.
Sure.
So I remember to reach out to you and see what's out there in terms of products.
So I and I'm sure there's more than just what I'm providing, right? So I hope everybody just takes this with a grain of salt as to what I can provide. If whatever I'm saying, doesn't align with what you're looking for, then just keep looking, because I'm not saying that I have all the answers, right? So for me, what I like about what I have to offer is we can go to 25% down with somebody, who's like no social security number, no visa, never stepped foot in the United States.
Seriously.
Like you can get a loan. Yeah, I just did one. Somebody from Slovenia, and was able to help them get a loan. So the way to do it is you have to have an LLC.
Yeah.
So you get an LLC in the United States. You can get an EIN number without having a social. You can get an EIN. Okay, so if you go online and just type in how to get an EIN and an LLC without a social security number in the U.S., you're going to get a ton of articles and probably more companies that will do it for you to help you do that, to creating your LLC. So the LLC doesn't need to be in the state that you're buying in. So I have people creating their LLCs in Wyoming or Delaware or whatever, or Nevada, whatever other state. It doesn't matter, and we can still do the loan in Dallas, for example. So that's a key piece there. We can go in terms of down payment, 25% down or 30% down.
Mm-hmm.
If it's a regular long-term rental, we go 25% down. If we have to use Padslett income, or we have to use Airbnb income, which we can do, we can use Padslett or Airbnb income, we have to go 30% down.
30.
Yeah, only if we're using short-term rental income.
So, okay.
But otherwise, it's 25.
And how are you evaluating the income then?
How do we what?
How do we evaluate the income?
So we don't look at the income of the borrower. So I get a few questions, especially from Canadians. They'll say, "Hey, can I use my income in Canada?" Or they say, "Can I use my Canadian credit score? I've got an 800 credit score." Both of those are no. We don't. This is for investment properties only, right? We're not buying, homes for them to live in. So we use the income of the property to qualify, and then we use, as long as they have assets. So example, that 25% down, So let's just say, give me a purchase price in Dallas.
350.
250.
350.
Okay. So 350, and is it a pad split or is this just a regular property?
It's a conventional one, but then going to be transformed in a pad split.
Okay. So we can pick it up with a regular DSCR, let's say. Hopefully the rents are decent. What do you think the rents are in that market for that property? Not pad split, just regular long-term rent.
2,400.
2,400?
Yeah,
That's a little low.
I know.
So going 25, we'd have to run the numbers, but let's just go, if it was 25% down, so 350,000 times 0.25. I got my calculator over here. You're at 87,500.
Mm-hmm.
And then you're probably going to be paying another, I know your taxes are pretty high in Texas.
Yeah.
So I would probably say another 18 grand in closing costs, because you're not financing the points, right? You have to pay like my fees, origination fees.
Yes, yes.
You have to pay escrows, which is like taxes and insurance. You have to pay title. So you have to pay 12 months of insurance. Sometimes you pay 6 months of property taxes. So I would comfortably add 15 or 18 grand in closing costs to the 87.5. So that now puts you at 105. So now you're all in at 105, and you need 6 months principal, interest, taxes, and insurance reserves.
Oh, wow.
So-
And how can I show that? Like in a 401? Is it possible?
But if you're a foreign national, then you don't have a 401.
Yeah, I'm thinking on my own
yeah,
terms.
But yeah, if it's just a regular buyer, we can use a brokerage account.
Okay.
You know, we could use a 401, a Roth, and all that. But for foreign nationals, that money does not need to be used. So we're not gonna use the money, but it does need to be transferred. So it actually needs to be in a U.S. bank account.
Okay.
So now we were at 105. Your cash to close.
Mhm.
So cash to close at 105, but you need 6 months PITI. So let's say on a 350, 6 months might be, PITI might be like 2,500 or so. So just say it's 2,500. So 2,500 times 6 takes us to 2,500 times 6. What is that? 150? 2,500 times 6. Yeah, 15 grand. Right. So you're looking at 15 grand in seasoned, or not seasoned. Oh boy, yeah. So 15 grand in reserves.
6 months?
Yeah, for 6, exactly. That covers your 6 months. So then in total, we would need to see, in that example, 120 grand.
120, yeah.
120, and that would need to be transferred from their Canadian bank account, or any bank account, any foreign national. It doesn't matter if you're Canadian or from Russia. It needs to be transferred into a U.S. bank account, and it only needs to be seasoned in a U.S. bank account for 3 days.
Okay.
Now, it needs to be seasoned in their account for 60 days.
Yeah, that's the regular one. Okay.
So that's different. It's different for U.S. So in the U.S., I have options where there's no seasoning period. As long as the money comes from your bank account, we can close. And then I have options where there's only a 10-day seasoning period.
Okay,
So
let's go back a little bit. So if this guy, which is Canadian, wants to invest here in Dallas, wants me, for example, I need a proof of funds, right?
Right.
And I need a letter from you saying he's able to withdraw. So how can he get that first? Yeah.
So for pre-approval, I'm pretty easy. I'm pretty chill.
Okay.
So what I asked for, because this is a non-conventional loan, right? We're using DSCR non-conventional loan.
Yeah.
So I'd ask for passport, basically photo of his passport, and then I'd ask for a screenshot of his liquidity. So I'd go through this analysis with them, and I'd say, I probably would look for a little bit more. Instead of 25%, I'd look for 30%, just to make sure we have enough padding there, or at least what resources do they have access to. to be able to get on the property. So I'll usually ask for 25% down payment, right? And then plus the closing costs and then plus the reserves. I tell them screenshot your different accounts, send it to me so I can take a look that they have it. And then, or if they don't have it, or if I think we're cutting it close, I ask them, do you have other means? If you needed more money,
Sure.
where would you get it? And then just to have a backup. And I don't need their credit score because we don't use their credit score, so I won't ask them for their credit score. By the way, their rate is pretty gnarly. So a foreign national rate right now at 25% down, you'd be in the nines, like mid nines, 9.25 to 9.5. If you go 30% down, you'd be at like 8.75 to 9.125.
Okay.
And you can always buy down the rate, right? You can buy it down if you wanted to. Then I need the LLC, LLC docs to show that you're in the process of creating an LLC or you're going to. At the end of the day, like it's their earnest money. So, I just try to make sure, I try to educate them that, how long is it going to take you to create your LLC? And I try to get them started on that process early because you don't know how long it's going to take necessarily. My concern is that it might, you go under contract, you try to create your LLC at the same time, and your LLC takes 2 months. I don't know.
Yeah.
I mean, I've heard of people getting it in as fast as 2 weeks. I've heard horror stories of people getting it as slow as 2 months.
Oh wow. Okay.
So getting their LLC is for sure top priority. And then how much they want it for. That's really it. So that's all I need for pre-approval. It's not a complicated process.
Okay, great. So that's an easy part. Okay. So I'll reach out to him and let you know, give you his contact. Now for my own property here. So I bought a house November.
Okay.
Conventional at 8%. It was the peak of the market. Then I created a pad split out of it. Now it's running as a pad split. So how can I take the equity out? Because I bought it for 290 and it appraised for 350.
Yeah. So how much money did you put into it? You bought for 290, and how much did you convert it to a pad split for?
70K. Because it required a bunch of.
What's your loan amount on that?
80%, I think.
So you bought it for 290 at 80%. So your loan amount is 232. So let's say you get 75% on your 350. So 232, you go 350 and 75. You're at 262. So, if your closing costs are going to be like 10 grand, you're going to pull out 20 grand. The difference from 262 to 232, right, is 30 grand. So is doing the refi worth pulling 20 grand out for?
But in this case, you're not using the pad split income?
I mean, even if you use the pad split income, that doesn't matter in terms of value.
Okay.
Pad split income only helps you qualify for the loan.
Okay.
But if you use pad split income, even if you use pad split income, you're still going to be capped at 75% cash out. We could.
I'm okay with that. I mean, the cash, the
but
gross
75%, 75% takes you to 262.
Of that 350, right?
Right. 350 times 75% is 262. But your current loan amount is 232.
Yeah.
So the difference is 30 grand, but your closing costs, I'm just estimating, will be 10 grand.
10.
Right. So that means your take home in your pocket is 20 grand.
Okay.
Your rate will still be the same. I think right now, I mean, what's your credit score? If you don't mind sharing.
760, 770.
That's good. So your rate would actually be better if you did a 75% cash out. You're as long. I guess if depends if long-term rents or not, but your rate could be the same. Could be the same or better. It depends if we're using if long-term rents or if we have to use pad split income. Depending what lender we use. If we're using pad split income, then you'd probably be at 8%.
Okay. So this means that the pad split income only tells me if I'm able to pay the mortgage or not, right? Then the valuation of the house is still with comps.
Correct. Right. Because it's not like a legitimate subdivision multifamily.
I got it.
You're not permitting this and calling it different units. So no bank is going to lend to you. I don't want to say no bank, right? Like scratch. But for the most part, the conversations that I've had with banks that do lend based off of income, they can't use that. They can't use it because it's a single family home. If it was a duplex or a triplex or a fourplex, it's a different story, because now that's actually a multifamily, and there's there's precedent on using a multifamily to lending on a multifamily with the income approach.
Yeah. And do you see that environment change in the time future?
For single
because
homes, it would have to be like a reclassification, because the problem isn't the lenders, right? The problem are the buyers of the loans. So if a lender, because remember, a lender just creates the loan, but they don't hold on to it.
Yeah.
They resell the loan on the secondary market. So if the lender is originating loans and they go to resell it on the secondary market, but there's no buyers, well, they're screwed. If they can't resell the loan, they can't get more liquidity, and so then they get caught carrying the loan for 30 years. That's how a lot of banks go out of business, because they run out of liquidity. So the problem is, do I see it changing? The only way I see it changing is if the investors who are buying the loans, they adjust. But I just don't see it. Just becomes more risk. It becomes more like added layers of risk. Even right now, it's hard to find lenders who will lend on a converted pad split because of the risk profile. For them, they see it as a higher risk. Just like
to resell the loan, right?
Yeah, exactly. Okay. They have less buyers, less buyers for the loan type. We still have the solutions, we still have solutions, but I mean, it's not, of 20 lenders, you've got 1 or 2, maybe 3 now that are lending on it.
Okay. And I guess the same rules applies to Airbnb.
Airbnb is a little easier on purchases, because I do have a lender where we can use 80% of AirDNA income, and we can go 20% down using AirDNA income.
But that's what I want to see in pad split. When we have that type of model in pad split, it will help things.
Yeah.
Right.
On the purchases, that's really nice, but with pad split, we have to go 25% down.
I'm okay with that, as long as I'm able to appreciate the property based on the income.
Oh, no, but in either case, like with
I said, right? Okay.
In either case, even the Airbnb one, you're not appraising the value of the property based off the income.
Just my ability to pay the mortgage.
Right. Now, but just a caveat: if it was a duplex or a triplex or a fourplex, that's a different story. But like single family home appraisal, yeah.
Okay.
Makes sense.
Makes sense.
Yep. Cool. Any other questions? What are you thinking?
No, I think I'm good. Now I understand the difference between that evaluation price and my capability to pay the loan. That makes sense now.
Yep. You'll be cash flowing really well, but yeah, you kind of shot in the foot with the money you left in the deal.
That's true. Yeah. No, but I'm glad about the property. I mean, it's in appreciation area, so I'm okay. So
are you filling it, or is it already converted?
Yeah, I mean, I filled 10 rooms in 10 days.
And so how much do you think you're pulling in right now, net?
Gross like 8,500.
Wow.
Cash flow around 3K.
Yeah, that's sick. That's really, really solid. I mean, your cash ROI, if you only put 20% down on 60. That's only going to be a 3-year cash on cash return on investment, probably.
Exactly. And I have a bunch of investors reaching out, hey, I want this, but I don't want to leave any money on the table. I said, then it will be a little bit difficult to find it, right?
Yeah. I think that you have to reframe their mindset. Most Burr investors think that I want to do the Burr strategy, and then they want to make like $100 to $300 a month. But to make $3,000 net is like,
right, with 8% interest rate. When it
Right.
goes down, I will
Yeah.
increase the cash
Are you
flow.
self-managing?
Yeah.
Okay, so you're like responding to clients and stuff like that in the app.
Yes, I mean, it was in the beginning, they asked a bunch of things and it was like babysitting, but
Yeah.
but now, the last 2 weeks, nothing. It's all good.
Cool. All right, man. All right, Tiago. Anything else? We're
No.
good to go?
Thanks for your time, Fernando. So
Of course, man.
if people need to reach out to you, what would be the best way?
Instagram is really good. You can text me 626-714-2440. But honestly, Instagram's really good. They can also reach out to Tiago. Reach out to your agent first, and your agent will connect you with the best lender that they recommend. Because I'm not always the best lender. I don't do hard money loans anymore. I don't do construction loans anymore. I don't even do conventional loans anymore. Like I only do DSCR, or I only do pad split, only Airbnb. Yeah, I'm super niche. But we have like 30 loans. Literally, we have 30 loans in processing right now.
Well, congratulations, man. I still remember you were starting, right?
Yeah,
I still remember those days.
less than a year ago, just starting. So we've really scaled the business to handle the volume, but because of that, we've had to say no to a lot of things in order to focus on the one thing.
Okay.
Cool.
Because I'm thinking on maybe building pad split. I think it makes more sense. So I will need to find a new lender for construction then.
Yeah, I recommend Anchor loans. Anchor is good.
Anchor?
Yeah, Anchor, ANCHOR. I know a lot of people use them for ground up construction. And then another lender is Kiavi, KIAVI.
That I know.
Also, so.
Okay.
All right. We'll talk later. Cool, Tiago?
Thank you. Thank you.
Thanks for having me on. See you, dude.